Hello friends, today we discuss the topic forensic accounting. I may start with a simple question. A company says that it maintains accounts properly and says that everything in its accounts is correct. But later it is discovered that lakhs of rupees have disappeared. What do you think happened? The reasons may be someone stole the money, or the accounts were manipulated, or there was fraud, or somebody cheated the company. Okay, here we should find out the problem and also why and how it happened. This is exactly why we study in forensic accounting. Forensic accounting is not an ordinary accounting. It is an investigation of financial records to discover the truth. It helps us to detect fraud, to ensure transparency, protect trust, and to support better decisions. Every number tells a story. Sometimes numbers can hide the truth. A forensic accountant tries to uncover the real story behind those numbers. A forensic accountant investigates financial crimes. In today's class, we will learn how accounting, investigation, and law work together to uncover financial fraud. Now, let us understand exactly what forensic accounting means. Look at the first point on the slide. The word forensic means suitable for use in a court of law. That means the information collected should be strong enough to be used as legal evidence. Look at the next point. The slide explains that forensic accounting combines accounting, auditing, investigative techniques, and legal knowledge. These are used to examine financial records, detect fraud, collect evidence, and present findings before legal authorities. It is more than ordinary accounting. An ordinary accountant records transactions. A forensic accountant goes one step further. He investigates whether fraud or financial misconduct has taken place. Therefore, a forensic accountant needs additional investigative and legal skills. Forensic accounting uncovers the truth behind numbers and turns it into evidence for justice. Now, let us look at a professional definition of forensic accounting. This slide gives the definition provided by the Association of Certified Fraud Examiners, ACFE. According to this definition, forensic accounting uses accounting skills together with investigative techniques to resolve financial disputes and detect fraud. The definition reveals that accounting gives us the financial information. Auditing checks whether the records are correct. Investigation searches for hidden facts. Law ensures that the evidence is legally acceptable. When all these come together, we get forensic accounting. Look at the diagram at the bottom of the slide. We can see accounting, auditing, investigation, law. These four together create a strong investigation. Which one is more important, accounting, investigation, or law? All are equally important. If one part is missing, the investigation may not be complete. That is why forensic accounting is considered a multidisciplinary profession. So far we know what forensic accounting is. But why has it become so important today? Why is forensic accounting needed? Look carefully at the reasons listed on the slide. The modern business world is changing rapidly. Today, most business transactions happen digitally. We use online banking, digital payments, internet banking, electronic transfers. These systems are convenient, but they also create new opportunities for fraud. Now the companies have complex corporate structures. global business operations, and weak internal controls. All these factors increase the chances of financial fraud. What about we people? How many of you or your parents use UPI or internet banking? Today, almost everyone uses digital payments. That's why cyber frauds, online scams, and financial crimes are increasing. Because of this, organizations require experts who can detect fraud before it causes significant losses. That expert is the forensic accountant. He not only detects fraud but also helps organizations prevent future fraud. Thus, detection and prevention of fraud are the biggest purposes of forensic accounting. So far, we have understood the meaning and importance of forensic accounting. Now, let us learn what forensic accounting tries to achieve. These are called its objectives. Look at the slide. It lists 8 important objectives. The first objective is to detect financial frauds. The main responsibility of a forensic accountant is to identify dishonest financial activities. The second objective is to prevent future frauds. A good investigation not only identifies today's fraud but also recommends ways to stop similar frauds in the future. The third objective is to investigate financial irregularities. If something unusual happens in the accounts, a forensic accountant examines the records carefully. It also aims to collect legal evidence so that the findings can be used in court. Assist courts during legal proceedings by explaining financial matters. Quantify financial losses, which means calculating the actual amount of money lost. Identify the persons responsible for the fraud. Strengthen internal controls so that the organization becomes safer in the future. Which is better, punishing fraud after it happens or preventing it before it happens? Of course, preventing it before it happens. That's why forensic accounting focuses on both detection and prevention. Look at the message at the bottom. Forensic accounting not only uncovers the truth but also helps in building a transparent and ethical organization. That is its ultimate objective. If these are the objectives, what qualities should every forensic investigation possess? Let us see characteristics of forensic accounting. This slide explains the important characteristics of forensic accounting. The first characteristic is investigative nature. A forensic accountant works like a financial detective. Instead of simply recording transactions, he investigates suspicious financial activities. The second characteristic is evidence-based investigation. Every conclusion should be supported by proper documents and evidence. A forensic accountant never depends on assumptions or guesses. If you accuse someone without evidence, will the court accept it? No. That is why evidence is the foundation of forensic accounting. The third characteristic is legally acceptable evidence. The evidence collected should be admissible in court. The fourth characteristic is independent and objective. A forensic accountant should remain unbiased and should not favor any person. Finally, the investigation should remain confidential. Information collected during the investigation should not be disclosed unnecessarily. See the statement at the bottom. It reminds us that forensic accounting combines accounting, auditing, investigation and legal knowledge to uncover the truth and present it as evidence. Which characteristic do you think is the most important, evidence or confidentiality? Actually, both are equally important. Without evidence, the case becomes weak. Without confidentiality, the investigation may be affected. Now, many students become confused between accounting, auditing, and forensic accounting. We can see the differences between accounting, auditing, and forensic accounting. Look at this comparison table carefully. The accounting mainly records financial transactions. It is a routine activity carried out regularly. Its focus is on maintaining books of accounts. Auditing verifies financial statements. It checks whether the accounts present a true and fair view. Audits are usually conducted periodically. Then the third one, forensic accounting. Forensic accounting investigates fraud and financial crimes. It begins when fraud is suspected. Its focus is on collecting evidence and conducting investigations. It is mainly used during legal proceedings. Each profession has a different role. If a company wants to prepare its annual accounts, whom will it need? An accountant. If it wants to verify these accounts, an auditor is needed. If it suspects fraud, then the company needs a forensic accountant. Read the message at the bottom. Accounting records, auditing verifies. Forensic accounting investigates and uncovers the truth. This one sentence is enough to remember the entire comparison. Let us study the role of a forensic accountant. This slide explains the important responsibilities of a forensic accountant, or we can call it role of a forensic accountant. The first role is investigation. The forensic accountant examines suspicious financial transactions carefully. The second role is fraud detection. He identifies manipulation of accounts and dishonest financial practices. The third role is evidence collection. He gathers financial documents, emails, invoices, contracts, and digital records. The fourth role is litigation support. What is litigation support? The forensic accountant prepares expert opinions that help courts understand financial disputes. The fifth role is court testimony. Sometimes the forensic accountant appears before the court as an expert witness. The sixth role is risk assessment. He identifies weaknesses in the organization's internal control system and recommends improvements. Why should a forensic accountant know both accounting and law? Because evidence should be legally acceptable. A forensic accountant must not only discover the truth, but also present it properly. Now, the message at the bottom. The role of a forensic accountant is to find the truth, present the facts, and support justice. Now, the skills required by a forensic accountant. Let us understand what skills are required to become a successful forensic accountant. Look at the slide. It says that a forensic accountant requires knowledge beyond accounting. The first group is technical skills. These include financial accounting, cost accounting, auditing, taxation, and knowledge of corporate laws. These provide the foundation for understanding financial records. The second group is investigative skills. A forensic accountant should have good observation, questioning, interviewing, and data analysis skills. These help in identifying suspicious activities and collecting facts. The third group is technology skills. Today, many frauds happen through computers and digital transactions. Therefore, a forensic accountant should know spreadsheet analysis, data mining, computer forensics, and digital evidence examination. Finally, there are personal skills. These include integrity, patience, logical thinking, communication ability, and analytical mindset. If a forensic accountant is very intelligent but not honest, can he be trusted? No. Technical knowledge alone is not enough. Integrity is equally important. A successful forensic accountant combines technical expertise, investigative ability, technological knowledge, and strong personal qualities. Okay, Now let us see the different kinds of fraud that forensic accountants investigate. The first is asset misappropriation. This means stealing or misusing company assets. For example, an employee stealing cash from daily collections. It is asset misappropriation. The second is financial statement fraud. Here, the financial accounts are manipulated to show higher profits or losses. The third is payroll fraud. The slide gives the example of creating ghost employees and withdrawing their salaries. What is ghost employee? Here the accountant creates an imaginary employee and pays a salary. Of course, this salary goes to the accountant. The fourth is procurement fraud. This happens when purchases are made through unfair practices such as accepting commissions or paying inflated prices. Next is insurance fraud. For example, submitting a false insurance claim for a vehicle that was never damaged. Sixth is banking fraud. Examples include loan frauds, fake documents, and electronic banking frauds. Finally, cyber fraud. This includes online banking fraud, phishing, and credit card fraud. Which type of fraud do you hear about most often in newspapers? We have heard about online fraud, banking fraud, cyber fraud, etc. With digital technology, cyber fraud has become one of the fastest growing financial crimes. Understanding different types of fraud helps organizations prevent losses, strengthen controls, and take timely action. So, how does a forensic accountant investigate these frauds? We can see the investigation process in forensic accounting. Look at the 7 stages. Step 1. Identify suspicion. The investigation begins when a complaint is received or unusual financial activity is noticed. Step 2. Plan investigation. The investigator decides the objectives and prepares a plan for collecting information. Step 3. Collect evidence. Documents such as invoices, bills, bank statements, emails, accounting records, and CCTV footage are collected. Step 4. Analyze evidence. The investigator compares records, identifies unusual transactions, and searches for missing documents. Step 5. Interview concerned persons. Employees, suppliers, or witnesses may be interviewed to gather additional facts. Step 6. Prepare report. The findings and evidence are organized into a professional report. Step 7. Present before court. If required, the forensic accountant presents expert evidence before the court. What do you think? Can a forensic accountant directly accuse someone without completing these steps? No. Every investigation should follow a systematic process. Remember the key message. A systematic investigation ensures that the truth is uncovered, evidence is reliable, and justice is supported. To complete these investigations, forensic accountants use several specialized tools and techniques. This slide introduces some important investigative tools. The first is ratio analysis. It helps identify abnormal financial trends by comparing financial figures. Second is bank reconciliation. It helps detect hidden or unexplained bank transactions. Third is data analytics. Modern software analyzes large volumes of financial data quickly and identifies unusual patterns. The fourth technique is Benford's law. This is a statistical method used to identify unusual patterns in accounting numbers that may indicate fraud. The fifth is computer forensics. It helps recover deleted digital files and electronic evidence. Finally, document examination. This involves checking documents carefully to detect forged signatures or altered records. Now I have another question. Can a deleted computer file sometimes be recovered? Yes. That's why digital evidence has become very important in modern investigations. The right tools and techniques help forensic accountants uncover the truth and support fair decision making. After learning about the tools, let us see where forensic accounting is actually used. Applications of forensic accounting. This slide shows that forensic accounting is useful in many sectors. The first is the corporate sector. Companies use forensic accounting to investigate employee fraud, manipulation of financial statements, and internal misconduct. The second is the banking sector. Banks use forensic accountants to investigate loan fraud, money laundering, ATM fraud, and digital payment fraud. The third area is insurance companies. They investigate suspicious insurance claims. The fourth is government departments. Forensic accountants help detect corruption and misuse of public funds. The fifth area is court. They assist in settling financial disputes by providing expert financial evidence. Finally, tax authorities use forensic accounting to detect tax evasion. Forensic accounting helps organizations and authorities ensure transparency, accountability, and financial integrity across all sectors. That is why forensic accounting is becoming increasingly important in today's economy. Now let us understand why forensic accounting is so valuable for organizations. Look at this slide. It says that forensic accounting brings accuracy, accountability, and protection to organizations. Let us discuss these advantages one by one. First one, detects fraud quickly. The first advantage is that forensic accounting helps identify fraud at an early stage. The earlier the fraud is detected, the smaller the financial loss. Second one, reduces financial losses. When fraud is identified quickly, organizations can prevent further losses and protect their assets. Third, strengthens corporate governance. Forensic accounting encourages transparency, accountability, and better internal control systems. This improves the overall management of the organization. 4. Improves investor confidence. Investors prefer organizations that maintain honest and transparent financial records. This builds confidence among shareholders and the public. 5. Supports legal proceedings. Forensic accountants prepare reliable evidence and expert reports that help courts understand financial disputes. 6. Enhances transparency. Financial reporting becomes clearer, more accurate, and more trustworthy. 7. Helps recover stolen assets. In many cases, forensic investigation help trace stolen money or misappropriated assets. 8. Discourages future fraud. When employees know that fraud can be detected, they become more careful. This itself acts as a deterrent. This is why many organizations now treat forensic accounting as an important part of good governance. Okay, although forensic accounting has many advantages, it also has some practical limitations. This slide reminds us that no system is perfect. Forensic accounting also has certain limitations. The first limitation is its high cost. Investigations require specialized software, trained professionals, and considerable time. Therefore, investigations can be expensive. The second limitation is the need for highly skilled professionals. A forensic accountant should know accounting, auditing, law, investigation techniques, and technology. Such experts are not always easily available. The third limitation is that investigations are time consuming. Collecting evidence, analyzing records, and prepare reports may take weeks or even months. The fourth limitation is that evidence may not always be available. Important documents may be lost, destroyed, or intentionally hidden. The fifth limitation is that modern frauds are becoming more sophisticated. Fraudsters use advanced technology and makes investigation more difficult. Finally, the success of an investigation depends on the availability and quality of records. If records are incomplete or inaccurate, the investigation becomes more challenging. Without proper records and evidence, even experienced investigators face difficulties. These limitations highlight the need for strong internal controls, good record keeping, and ethical behavior. Now, let us see the career opportunities available in this field. Look at the slide. It says that career opportunities are expanding because financial crimes are increasing. A forensic accountant can work in many organizations. These include banks, insurance companies, chartered accountancy firms, corporate organizations, government departments, investigation agencies, law enforcement organizations, anti-corruption agencies, regulatory authorities, independent consulting firms, etc., etc. As businesses become more digital, organizations need professionals who can investigate financial fraud and strengthen internal controls. For students who enjoy analyzing data, solving problems, and thinking logically, forensic accounting can be an exciting career. This is one of the fastest growing specialized areas in commerce. Okay, let us conclude today's class. Thank you.